Brian, I have a client doing business in Mexico, and they formed a Mexican corporation, but I received a call today from his accountant, and he's worried about the complex, controlled foreign corporation tax return.
Oh, yeah.
And the specter of an IRS audit.
Yeah.
So what do you think?
Those returns are really complex. This 6-part return, the fine for being a day late, $25,000 per part.
Wow.
Really complicated. And the returns had to be done both under tax basis and generally accepted accounting principles with currency translations. Really complex. And then the worst part about Mexico is that it's a pretty high tax country. Under the new law, the corporate tax rate's 18% and then another 30% withholding tax, 48%.
Do they have a flow-through corporation status like we do here with the S corporations?
No. Everything's treated as what we call Subchapter C, a separate entity. And then our tax law treats any foreign corporation as a separate entity too. So, your clients may be used to being in an S corporation, and they pay state income tax and an instant deduction on their return. Here they're going to pay that tax in Mexico.
But once they pay the tax in Mexico, the Treasury or Internal Revenue Service is going to give a credit for that tax paid here, aren't they?
Well, that's the problem. They're not. So they're going to end up paying tax in Mexico as a corporation. And then when they take the money out as a distribution, they'll pay tax again in Mexico as a dividend. And then when they get it here in the United States, they'll pay tax on that dividend again. And at that point, maybe they can offset part of the Mexican dividend tax, that second tax in Mexico, against the U.S. tax. And that's kind of a tricky equation. And then if they're in a state like California or any state that has high taxes, they'll pay tax again in California. So they can get taxed 3 or 4 times.
I remember you talking before about solutions to this, and I vaguely recall something about a dual corporation. Is that the fix?
Yeah, well, you have a good memory. That was like 18 years ago when you were like 10. Yeah. A dual corporation is really interesting. There's only one state that does it, Delaware. And they'll let any foreign corporation have a corporate charter in their state at the same time. And you don't need to form the two at the same time. So your client could have his Mexican corporation doing business. He comes to you and he chit-chats with you. You could go ahead, through CT Corp, form a Delaware Corp. They have a special corporate code section for dual incorporation. And then the IRS will let your client elect S corporation status on his Delaware corporation. What our regulations say is that any corporation with a dual status, an American status and a foreign status, is now an American corporation. So it's actually lost its foreign status to the IRS, which means that complex return that the accountant was worried about doesn't have to be filed. So he doesn't have to worry about that. He doesn't have to worry about any of the stuff called subpart F income, which is a complex international American tax law. He has just a simple domestic corporation, makes his S election, and just like he had a business in California, he just reports it on his return. That tax paid in Mexico at both the corporate level and the dividend withholding tax level will be a foreign tax credit. So he'll get a big refund in the United States.
I'll tell him to call Brian Dooley.
Sounds good. Then I'll give you a call, Daryl, and the law firm of Russell Miller and International Tax Counselors, my consulting firm, can work together and get the job done for your client.
Okay. At what number should the accountant call?
Oh, good. Thank you. 949-939-3414. And your number is still 949-955-3570.
You really retain those numbers. You got it exactly.
I'm an accountant. Thank you.
Fantastic.